Vinit Sambre is head of equities, DSP Investment Managers. He's with us now to take some questions. Vinit, good to have you with us here. Thank you very much for your time. Let's just start with tracking the pace of earnings, Vinit, and how they are panning out to be. I put out a piece a week before last, equal number of, and I looked at what these numbers for the fourth quarter are doing to full year FY24 estimates, earnings estimates, and almost equal number of downgrades, equal number of upgrades. So kind of mixed out there. But a week has passed since. What is your own estimate and how are you tracking things?
So, Prashant, I think as we entered into the earnings season, I was slightly more skeptical around the growth metrics overall. And what I sort of also felt, like you mentioned, is that in terms of the companies broadly, they have either outperformed or they have been in line. The number of disappointments have been slightly on the lower side. And I think the thesis which I had in mind, wherein, while we may have the top line may be moderating for many segments, but I think it will be the profitability which will start improving. But I was not anticipating it will start happening starting this quarter. But what we have witnessed, let's say, across segments like consumers, automobiles, cement, all of these segments, they have benefited because of the lowering of the input prices. And that has benefited the profitability. And I think this is important matrix which is likely to play out over the next maybe 2 or 3 quarters, and I think which is what I believe is likely to keep the earnings momentum maybe okay to slightly positive. So I think overall, I would say that earnings have been slightly better than my anticipation. The one part of the segment which is the investments, engineering, capital goods, I think that continues its strong momentum. The order books, around these companies, defense, engineering and all those stuff are doing well. So I would say that all in all, it's been a better outcome as compared to the expectation.
Okay, so earnings are better than what you had anticipated. That's always a good thing. Vinit, hi, good morning. Is there more valuation headroom for a market like India? Citi put out a note this morning where they say that the market valuations are quite reasonable if you compare them to the last 5-year averages. How are you feeling about it, and what kind of upside do you see purely on a valuation parameter?
So maybe I think the markets may be reasonably priced in terms of valuations, but we should, I think what we are also trying to sort of keep in mind is that we will have some of these macro news flows which are going to keep the overall upmove in check as well. Whereas, as I anticipate the earnings momentum to start accelerating gradually over the next 1 or 2 quarters will also mean that we don't see a lot of downside when it comes to India, specific earnings factor. So I think the other important matrix, which is the interest rates in the economy, which is also one of the important factors for the valuations, those are also helpful in a way. So I would say that all in all, I believe that while valuations are reasonable, all these volatility, the global volatility around recession and all may likely keep some of these upsides under check, but the downside also remains protected. And I think it's a good market from long-term investment perspective, as and when there are corrections for any reasons. I think those are the points where investors need to sort of get into the equities with a long-term view.
All right. Hi, Vinit. One segment that was ignored for the last few years has been the healthcare space, right? I mean, the pharma index is what I'm referring to. But, you briefly mentioned the last time around that you're giving it a closer look. So how are you approaching it? Are you going for the diagnostic companies? Are you looking with some of these bombed out pharma names? Or is there another way you're looking to play it?
So, Nigel, I think we have sort of gone wrong in a way in terms of we are, having decent exposure into the pharmaceutical and healthcare businesses. We still believe that the earnings cycle for the pharmaceutical companies largely will play out like it is happening now in case of, as I mentioned, consumers, cement, automobile. I think the same story is likely to play out in case of pharmaceutical, wherein they have got impacted because of the higher raw material prices. And those also, there are definite signals that, they are also cooling off. So to me, I think over the next 1 year, maybe there is a good, momentum likely. As you mentioned, they are, some of the companies, they have bombed out, the earnings have got impacted. So I think a low base has got created. And from a perspective that, when the world is going to remain volatile, I think what are the sectors which are maybe provide some amount of defense in terms of the business, and also there could be a tailwind in terms of the margins. I think healthcare, and within that, pharmaceutical companies forms, good basket there. As far as the other part of the healthcare is concerned, the hospitals, diagnostic labs, they are maybe slightly on the expensive side. Maybe at right valuations, it could be prudent to look at those as well, given the long-term outlook in those names.
Okay. You know, this is a question not so much, Vinit, about what you like and not. I just wanted your thoughts on, as an industry veteran, on the Sebi rules with regards to total expense ratio charged by mutual funds. Now, the impact will be assessed depending on whether you will absorb all of it or you will pass it downstream to brokers, distributors, etc. And if you do pass it on, how much will you pass it on by? So just wanted your thoughts, Vinit, in terms of what we're likely to see.
So I think first of all, I think in terms of the overall regulatory changes, the important ones, what we want to see, I think this would be in a way one of the major ones. And beyond this, I don't think there are going to be big changes. I think whatever happens to make the regulatory framework stronger, I think that is very welcome step in a way. And as far as the changes are concerned, I think we are still contemplating. We will be engaging with the regulators. We will share our views. But I think, as you said, definitely there will be some amount of bearing which will be done by the mutual fund companies. Some amount of the cost increases will be passed on to the distribution chain. And all those metrics are still yet to be worked out, but not yet finalized. But I think net, I think it's going to be not as bad is what I feel.
Okay. Vinit, I wanted your thoughts on the pharmaceutical space because there are a lot of accidents this quarter in terms of earnings. I mean, Divi's has seen a complete collapse in its margins in the second half of the year. You've seen some big accidents like Gland Pharma, which have halved in the last, 1 month or so. What's happening here? Is it just pricing pressure in the US, or has growth slowed down entirely? And what do you do as an investor in this space?
So I think within pharmaceutical, we need to also bifurcate where are the companies which had seen significant increases in the earnings because of COVID benefit. And I think those are sort of going away. And but there are also companies which didn't see as much benefit, one-off benefit, and I think those are being pretty steady. I can just maybe mention names of the likes of, let's say, Cipla, Alchem. All those type of companies are pretty steady. So I think there, for the companies which had seen one-off gains, they are now experiencing these normalization is what I would say. At some point, maybe all these businesses are if you ask me, these are very competitive businesses. They have created moats around what they have been selling. So I don't think that business value gets impacted as much over longer term. So at some point, these will also become good to buy. It's just at what valuation, how should one price in these one-offs, and how should one look at normalized level of earnings over the next maybe 2 or 3 years.
Okay, all right, Vinit, thanks so much for joining in. Always a pleasure hearing your thoughts. Looking forward to having a chat with you in the coming weeks as well. Let's focus